This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today it's time to speak about what is actual cash value. Insurers working without legislative or judicial direction created a working definition of the term actual cash value. Insurers recognized that actual cash value, or ACV, in a fire insurance policy was designed to establish a dollar value for items of destroyed property that were not new at the time of the loss. Since insurers had no easy means to establish the used value of property, they selected the following as their working definition of actual cash value. That is, actual cash value is the cost to replace with like, kind, and quality, less physical depreciation. This was referred to in Jefferson Insurance Company of New York versus the Superior Court, a 1970 decision of the California Supreme Court, which of course changed the definition of actual cash value to fair market value, a less than easy to work with definition, and told the insurance companies that they could define the term in their policy and avoid the problems. The working definition, although it did not always provide the complete indemnity contemplated by the insureds and by various legislatures, was eminently practical. A burned-out shell of a house only leaves clues as to what its actual cash value was before the fire. With minimal investigation, the cost of rebuilding can be readily ascertained. If the insurer paid to its insured the full cost of replacement, since the number was easy to compute, it would violate the traditional concept of indemnity and allow the insured to profit. Payment of replacement costs puts the insured in a better position than he was in before the fire. Deducting from the replacement cost a reasonable percentage representing the physical depreciation came as close as possible to providing the insured with true indemnity for the loss. Over time, courts have developed three primary tests to measure the actual cash value of the property. They are 1. Fair market value, usually described as the price a willing buyer would pay to buy property from a willing seller in a free market. 2. Replacement cost less depreciation, generally accepted to mean the cost to replace property at the time of loss minus its physical depreciation. And 3. The broad evidence rule, which was a judicious application of either number 1 and number 2 to the unique circumstances of the claim, whichever was more favorable to the insured. Some insurers have taken the hint first expressed in 1970 in Jefferson versus Superior Court and now define the term in most policies issued in California and across the country. Depending on the insurer, any one of the three options chosen by the courts across the company has now been incorporated into the policy. Some insurers elected to calculate ACV by deducting 20% from the full cost of repair or replacement. Since the basic charge had no relation to obtaining true ACV, the practice was widely condemned. For example, the Court of Appeals of Michigan went even further in decrying the practice of withholding 20% from a contractor's overhead and profit. In Salison versus State Farm, a 1998 decision, the court said this about actual cash value. State Farm's insurance policy in this case does not contain a definition of actual cash value, nor does it set out the basis on which State Farm determines actual cash value. The process by which actual cash value would be determined was contained in State Farm's operation guide In accordance with the provisions of that document, State Farm routinely deducts contractors' overhead and profit, as well as depreciation when it makes an actual cash value of the damage payment, under Section 1C1 of its insurance policy. There was deposition testimony that this procedure is contrary to industry norms and practice. In Bradley v. Allstate, the United States Court of Appeal for the Fifth Circuit in 2010 found under Louisiana law, actual cash value owed by property insurer is determined by calculating the cost of duplicating the damaged property with new materials of like kind and quality, less allowance for physical deterioration or depreciation. ACV is not in the Fifth Circuit necessarily synonymous with market value at the time of loss. The touchstone for determining ACV is the basic principle that an adequately insured person should incur neither economic gain nor loss when his property is destroyed. The term of obsolescence appears within the contract definition of actual cash value, which is one of the several methods insurers use to value property in the event of a loss. Other methods are market value, reproduction value, and replacement value. Many courts, including those in Michigan, adopted what is known as the broad evidence rule. Under the rule, fact-finders or appraisers may consider any evidence logically tending to the formation of a correct estimate of the value of the property, including market or reproduction or replacement values. The standard fire insurance policy has provided in essentially the same language since 1909, quote, "In consideration of the provisions and stipulations herein, this company does insure the above-named insured to the extent of the actual cash value of the property at the time of the loss." The intent of the legislature of the various states that have enacted a statutory fire policy by enacting a mandatory form of fire insurance was to codify and implement the traditional concept of fire insurance. Insurance exists to indemnify or compensate the insured for the actual loss he has sustained, without necessarily placing him in a better position than he was in at the time of the fire. Appellate courts have rarely been called upon to explain this basic purpose of fire insurance as codified. When called upon, the courts have limited their decisions to the fact situations presented to them. They have always confirmed that the purpose of insurance is to provide indemnity. It was only the methods by which such indemnity was to be achieved that was subject to interpretation. Perhaps to ease the burden on the courts, the state legislatures provided a means by which the traditional concept of indemnity could be measured. For example, the California legislature said, quote, "The measure of indemnity in fire insurance is the expense to the insured of replacing the thing lost or injured in its condition at the time of the injury, such expense being computed as of the time of the commencement of the fire." The legislature failed, however, to explain how one was to compute the cost of replacing a 30-year-old building. There is almost no supply of 30-year-old plumbing or lumber for the insured to purchase. A carpenter cannot construct a 30-year-old building. He can only construct a new dwelling. It is physically impossible to put an insured exactly as he was before the fire. It took 30 years of hard weather to pit the siding, many windstorms to wear and loosen the shingles, an earthquake or two to tilt the foundation, and 4 growing children to beat it up mercilessly. The problem of creating old with new, the legislature left to the courts, litigants, and the agile minds of adjusters and lawyers. Courts have touched the issue gingerly. They have paid lip service to the statutory mandate that the insured is only entitled to recover under the policy such loss as he has actually sustained. Sometimes the courts simply reduced an award to a sum less than full replacement cost with no explanation as to why the deduction was made. The question of how the actual cash value of covered property should be determined when calculating the value of any applicable premium is essential. 3 different tests exist to determine actual cash value of property when the policy is silent on the definition. These tests are the fair market value test, the replacement cost minus depreciation test, and the broad evidence rule. This article and video came from my newest book, How to Acquire, Understand, and Make a Successful Claim on a Commercial Property Insurance Policy. Information needed for individuals and insurance professionals to deal with commercial property insurance. Now available at Amazon.com as a Kindle book, a paperback, and a hardcover. If you found this video to be interesting or useful to you, please tell your colleagues and friends so that they can also subscribe to the blog and to the videos. Please also consider subscribing to my Substack publications and to my locals community. Thank you for your attention.